I'm Mila Gordo.
And I'm Vanessa Teckentine.
And I'm Kelsey Sunland.
And we're coming to you as workers from Bank of America, which is headquartered in North Carolina, in Charlotte. Here.
As my colleague Mila said, we're coming to you today because the Chief Financial Officer from Johnson & Johnson, Dominic Caruso, came to us asking for a loan for their company.
When determining the loan that we wanted to lend Johnson & Johnson, we had to look at 4 key factors. First, we analyzed Johnson & Johnson as a corporation in general. Then, we looked at their 2011 financial statements to see how they performed the past year. Third, we compared them to Pfizer, one of their biggest competitors, to better understand how the two corporations work together. Lastly, we calculated ratios, which is based off the numbers found in the financial statements, to understand their debt and all the other factors that would affect lending a loan. Here are the results. We began by researching Johnson & Johnson as a company. After visiting their website, we found that they were founded in 1886 and are headquartered in Brunswick, New Jersey. They were very innovative and made the first aid kit, sanitary napkins, and floss. Today they make common well-known products in pharmaceuticals and just products in general like Listerine, the Neutrogena line, Clean and Clear, and AccuView. Currently, Johnson & Johnson has more than 250 operating companies in 60 countries, employing 129,000 people. They have grown into the world's 6th largest consumer health company and are also the world's largest and most diverse medical devices and diagnostics company. This makes them very reputable.
The current ratio for 2011 for Johnson & Johnson to be 2.38. The current ratio measures the ability of the company to pay back their current liabilities with their current assets. Past records show that for Johnson & Johnson in 2010, there was an increase by 0.33.
Also calculated the company's quick ratio, which measures the company's ability to pay off their liabilities as they come due immediately. In 2011, the quick ratio was 1.54, which was a 0.28 increase in comparison to last year's 2010.
Okay. We found the payables turnover and days payable outstanding. This shows how many times a year an account's turnover and how many days it takes the company to pay off their accounts payable. In 2011, we found this to be 3.56, with the days payable outstanding to be 102.53 days. And for 2010, the ratio was 3.34, with days payable outstanding to be 109.28 days. This ratio also increased from 2010 to 2011.
When calculating the debt ratio, you divide the total liabilities over the total assets, which for 2011 for Johnson & Johnson was 0.4977, which rounds to around 50%. In 2010, it was 0.450, which is around 45%. For those numbers equal, if the percentage or the decimal point is greater than 1, that means that the company has more debt than assets. And vice versa, if the number is less than 1, it means it has less debt than assets, which is obviously what is wanted from it.
We calculated the leverage ratio, which is total assets divided by total stockholders' equity. It measures the proportion of each dollar of assets financed with stockholders' equity. We calculated for 2011, and the number was 1.99. When we calculated 2010, it was 1.82. That means the debt increased for Johnson & Johnson in 2011.
One of Johnson & Johnson's main competitors is Pfizer. Pfizer is headquartered in New York City, It was founded in 1849, and in 2011 was 31 on the Fortune 500 list. Pfizer is mainly a pharmaceutical company, and that is how it differs from Johnson & Johnson. In the 2011 financial statements, Pfizer's debt ratio was much higher than Johnson & Johnson. While researching and trying to compare the two competitors, came across a site called CNBC.com, who also noted the stock value and overall financial standing of the two companies. As founded, Johnson & Johnson beat Pfizer in overall growth and consistency. More specifically, both companies show on the income statement a major loss when it comes to patent expirators, while with Johnson & Johnson losing $3.8 billion annually and Pfizer losing almost double with $6.6 billion recently. In conclusion, when comparing Pfizer to Johnson & Johnson, sources and experts say that Johnson & Johnson has the higher valued stock, which helped us to contribute to the amount of money that we give Johnson & Johnson for their loan.
On behalf of Bank of America, we have decided to issue Johnson & Johnson a loan for $7,500,000 with an interest rate of 4%. This will be a long-term loan that they can pay back within 20 years. We came to our conclusion based off the leverage ratio and debt ratio, which gave us an overall view of how their debt ranked. They had a substantial amount of debt, but not enough for us to reject the loan or to give them little amounts of money. We also looked at the current ratio, the quick ratio, and the payables turnover ratio to see how their return rate was when paying back their liabilities. They had a very good return rate, so we figured that we could give them a long-term loan because we know they would pay it back. They are a reputable and profitable company that ranks 40 in the 2011 Fortune 500 list. And they are funded by retained earnings, so they don't need a lot of money. Therefore, we gave them a big loan, but we didn't give them anything that was too much since they already have a lot of money as it is.
Overall, we have found that Johnson & Johnson is a trustworthy company to provide a loan to. We determined this based on 4 factors, such as we looked at the overview of their company, we analyzed their balance sheets and found ratios comparing their balance sheets from 2010 to 2011, and we compared them to other companies with their same type of lines. With all of this information, we decided that they could have a long-term loan because they tend to pay back their debts pretty quickly. They're overall a very stable, functioning company, and we think they deserve this loan. Okay.
Thank you for taking the time to listen to our presentation.
We're very excited to see what Johnson & Johnson does with their $7.5 million over the next 20 years.
We're happy that you turned to us to get a loan. Thank you, Johnson & Johnson.
A family.